Today is October 21st, 2023, and we've got quite a lot to cover, from massive options contracts expiring to the roller coaster ride in stock and bond markets, and of course, the latest earning reports of some key players in the market. Firstly, I want to talk about the expiry of a whopping $2.5 trillion long-term options, contracts that were tied to stocks and indices. This colossal amount caused Wall Street's fear index, or the VIX, to hit a 7-month high, shaking the stock market. However, despite the market's turmoil, bonds continued their recent rally. The yield on the benchmark 10-year Treasury note had its first breakout above 5% since July 20th, 2007, first in 16 years. After the breakout, the yield fell back a bit, but the impressive performance of bonds continued to put pressure on stocks. Now, let's take a look at some of the big names that released their earnings reports recently. AT&T, the largest telecommunication service provider in the United States, reported its Q3 revenue at $30.4 billion, a 1% increase year over year. This reverses the trend of falling user growth over the past 4 quarters. Taiwan Semiconductor Manufacturing Company, TSMC, a leader in the semiconductor industry, reported a steady demand for mobile and PC ends, with AI becoming a significant boost. Their Q3 revenue and net profit exceeded analysts' expectations, showing a promising sign for the industry. However, we should not forget the potential risks. The AI chip export regulations in the US could threaten the recovery of the semiconductor market. So TSMC, as a foundry for NVIDIA's AI chips, may face a significant impact if the US Department of Commerce tightens the export control on semiconductors related to the Chinese mainland. Moving on to the banking sector, Bank of America's chief investment strategist has twice called this month for US bonds to be the best performing asset in the first half of 2024. He believes that a 5% yield is the Federal Reserve's bottom line. As the yield of US bonds continues to surge to critical points, its 30-year bond yield has exceeded 5%, and the 10-year bond yield is only a fraction away from 5%. Morgan Stanley said that if the 10-year US bond yield reaches 5% or higher, it would be a good opportunity for investors to enter the market. They believe that once the Fed starts cutting interest rates, it will not only drop by a small margin of 25 basis points, but by a large margin of 200 basis points, which will rapidly steepen the yield curve. However, this process will be painful, and bottom fishers need to be prepared for the bitter before the sweet. Now let's move to a geopolitical concern. If they possible to final in the middle of the crime, with the market preparing for diplomatic efforts have not eased tensions in the Middle East, and the conflict continues. On the oil front, Brent crude oil mildly rose ahead of the weekend. The U.S. Department of Energy recently stated that the Biden administration hopes to purchase 6 million barrels of crude oil to supplement the Strategic Petroleum Reserve. To wrap up today's market analysis, I'd like to remind you that we're entering a period of potential volatility and uncertainty. As always, investing comes with risks. So it's essential to do your due diligence and take calculated risks. That's it for today's financial market update. Have a great weekend, folks. Always bear in mind, the stock market is a risky place. Invest wisely. Thank you for joining me today, and I hope to see you again next time. Goodbye.